What is going on, traders? Welcome to this week's weekly market recap. We are back for a second week in a row. We're going to jump in without further ado. We haven't got time to waste, have we? So as per usual, green, yellow, red. Green means go, yellow means aggressive, but maybe if you know what you're doing and you've weighed up the pros and cons. And then we have red, which means yes, maybe valid, but to be avoided. All right. So if you're brand new and you're a mechanical trader at metal criteria and you took a red trade, it's not actually a trading plan violation. You're just not weighing up the pros and cons, right? So we're going to jump into green for go first. Right. Why is this one green for go? It's green for go because what do we have? Look at the daily time frame. So I noticed on our Platinum Partnership session the other day, even still, the DDPs, even our platinum partners who have been around for a while, who are applying a lot of time, energy, money, resources into becoming professional traders, this is still tripping them up. So what can we see? Run, pullback, run. Yes, deceleration. Price has fallen a bit from here, but then we had this candle that closed above that level, and we know that what was once resistance becomes support, right? So at first glance, and this is a little bit more of an advanced trade, touch, rejection, right? Looking like potential signs of a slowdown. But why I liked this one, even though we saw this double top, is that we look a little bit closer and we can see, particularly on the 1 hour, I'd say, that price has, it's like this resistance zone. Yes, it dipped. It was a little false breakout to the upside, this level. This is where I kind of determined the actual resistance level to be was there. Because we can see touched, many touches along here, even if we are including these ones between here and here. So for me, okay, none of these ones, that was not a break and retest of that level, right? So it still just acted as a deep rejection, and then very perfect rejection, kind of like a deep rejection. But notice how price was still sitting at that level. Rejection. The first time it actually created space above that level was here. It did a break and retest of this level. Very nice. Break, retest, and then it did kind of this little sort of complex pullback situation here, beautifully off the pivot line, the 50 EMA, and the support level. So break and retest of that level. Spectacular. Now, it wasn't in my trading hours, so I didn't take it, but I would have. Entry price would have been here, stop here, and profit target at the top of these, the bodies of these candles. You would have probably just missed profit target on that, and then it fell away. So obviously, the trade thesis still didn't play out as what we would have hoped for. But I like this as a trade, regardless of even if you took a loss on it. I like it as a trade for the reasons I just covered. And after seeing this kind of situation, bounce, and there's another break and retest, often my sentiment would have been bullish here, right? Especially following that bullish candle, would have been bullish. Obviously, my opinion was wrong, but my opinion doesn't matter, right? And the markets don't care about what my opinion is. It's about just, I mean, for me personally, it's about, and for every trader, it's about their analysis and having proven data that their analysis is effective. And this one here, I believe, had a profitable edge, even if it almost hit profit target, but still didn't. Anyway, good trade, unfavorable outcome. This is a trade that I took. There's two trades here. We'll stick with the one that was to avoid first, and we'll come around to the other one, just so we can clear this off. So why would we avoid this one? So we can see pip snatcher, pivot lines here. Nice and even. DDP's not bad because we're entering on this candle. So if you imagine, or if you can see, it was just high, low, lower, high, price running down here, bearish engulfing candle, little sideways candle, and then another bearish continuation candle trading down to recent lows. So we're entering on this candle before this candle had formed, right? So good DDP. I like that as a DDP. Why have I put avoid? Now, the reason why I put avoid here on this one is because we can see there's a low there, there's a high there, there's a lower low here. Now, the only way to enter this trade, and now this is good, is a downtrend, but the only way to enter this trade or for this to trigger is if it would have to come up and exceed the previous high, right? So if it would exceed that previous high, then it's now a choppy market condition. It's not one that we want to be trading. So, and if it was not to trigger that, if it was to remain in a downtrend, well, it would never trigger our entry, So it's one that we shouldn't place an entry order on, right? It might have not been super clear at the time if the charts only looked like you could only see up to here. But just if you ever notice that you're placing an entry order above recent high when taking a short position, should be a blinking red light there for you. Right, now moving on, I liked the DDP following. So this is a live trade that I took here. I'm only going to cover my day trading positions. I'm not going to cover the trend chases that I've been taking, but most of my positions have been trend chases as of late. But we're in this downtrend here, right? Low, high, lower low, lower high, running down, bearish candles, nice, rejecting 2050 EMA zone, little baby break and retest situation going on here. Nice, entered following this bearish engulfing candle. Looking at the 1 hour time frame, it was a little bit of a messy old dog's breakfast here, but I'm considering this high, low, complex pullback. Complex pullback can sometimes be a different name for just a weird pullback, but it's got a micro uptrend inside the overall downtrend. So I entered here 2 p.m. my time, as per my trading window. Entry triggered, and I took this as a hyper trade. Why? Because I take hyper trades when I'm in a downtrend in the daily time frame, when I'm trading with the trend and we're early run. So you can see we're before the recent low. We've got at least, there's like 2% down to recent low. If we're a late run, somewhere down here, if prices run, pullback, run all the way down to here, depending how momentum looks, I might go for a hyper, or I might just take the pip snatcher. But we can see it hasn't even reached recent low yet. So, I would be expecting price to reach, and it did reach recent low, right? In which case, if it's going to be 2% or 3% or something like that before we reach recent low, go with the hyper. At least I do, when I have time on my hands, because it does require trade management. So speaking of which, let's jump to the trade management stuff. The 4 hour wasn't against us. 4 hour trend was still intact. We're all good. 4 hours not giving us too much. So entry triggered here. Now, once position had started beginning, was it that early, was it? Okay, I guess it was that early. Once we had this little run down here, pull back, and then another bearish candle, I removed half risk. That was a little bit early, but it's okay. We'd had multiple candles. Position had, developed. And then price pulled back here. Price ran down. Run. Consolidated for quite some time. And then when price broke these lows here on this candle here, we had a close below those lows. I was happy to say, okay, I'm going to move to break even. So that's phase 2 risk removal at break even. If you're new here and you're thinking, what the hell is he talking about? This is trade management. This is for our positions that have like big 4% profit targets. We don't want to run all the way, 3/4 of the way to profit target for just a pullback. We need to secure little profits as we go. And then I jump down to the, I believe, 5-minute time frame. There's 5 and then 2 minute. So we can see at this point, because we got part way through and we were approaching those other lows, and it was getting late in the evening. So it was like, it's a position I'd already made my mind I didn't want to carry overnight. So at this point, it was when these lows, I went down to the 5 minute. Probably could have done it there, trimmed there, but anyway, low broke low, go behind recent high. Now we didn't get another swing here. We didn't get another high form and another low, but had this run down there, pulled back, formed a high, ran down and broke that low. I would have then gone ahead and put my stop loss up behind that high. It just didn't happen. And then at this point, I was just using manual trade management, and I was down on the 2 minute time frame. And it was late at night at this point. I was just like, give me an excuse to get out of here. And it was when, that is in the wrong place. It's supposed to be there. When the 2 minute 50 EMA broke and closed there, I just killed it. And I got a 1.24% on that. So marginally better than a pip snatcher. But the thing is that there's a lot more potential for it to go further. If this hadn't paused there, if it had kept, it fell relatively quick once it started moving. But we can see I entered here as 2 p.m. 24 hours later, done shit all. And then it was really in those last couple hours that it started moving. So at the point that I took the exit, I was kind of getting ready to, wanting to close out of the trade anyway. It did go on to pull back a bit and probably would have gapped a little bit, something like that, as through Devil's Hour. Floundered around. I wouldn't have survived this pullback here. But it did go on to, reach a deeper profit target, but I'm happy with that exit. I'm fine with that one. Cool. So that is good trade. Happy with that one. Moving on. Next good one. Next valid trade. Okay. There's 2 trades here. One is bad. Or one is Actually, let me see. There's two trades here. One wouldn't have triggered, which would have been an aggressive trade. And there's another trade here that was exceptional. It's trade of the week, and it's from one of our platinum students did take it. See if you can see it. See it or them. The obvious one is the pip snatcher, which would have been here. You probably wouldn't have been triggered in because you'll see that it was not quite on the. It just would have missed your entry. You target something like that. Maybe you would have taken profit on it. Not a great trade. Reason being, or would have been an aggressive trade. The DDP on this is just bad. When you're entering during this day, that means that you had this run up 1-2. It's not a negative DDP. It's just not exciting. It's not something that you would be writing home about. The only positive in favor is that you can see that you have that you had these highs here, and you might have been using that same kind of break and retest thing that I was talking about. Was it an Aussie CAD or whatever? Right, the break retest, cool. It's not bad. DDP is not good, but you'd be doing some advanced analysis here, which would have made this one actually this specific setup an aggressive trade. Right, but it did break the resistance level. Maybe you would have banked profit, maybe yes, maybe no. Now, that's not why it's green, because that one there is aggressive. Wouldn't have triggered anyway. Now, this one here is an IBOB for our playbook, from our playbook curriculum. You can see the playbook. So we got DDP more favorable because it entered. Remember, we entered on the following the green candle. So we entered on, following the red candle. So we entered during this day. By we, I mean our platinum student. I didn't take this one. It was Asia session. There's Leslie. We can have a look at Leslie's trade as well. Beautiful. IBO A because we had a lower high and lower low. And also we're drawing it from that high to that low. Entry there. Stop loss go, or entry here as per strategy guidelines. Stop loss here as per strategy guidelines. Profit target for our 50 as per strategy guidelines for a whopping 3.41% profit target. Yes, let's go, Leslie. Alternatively, if you were trading for our platinum partners, so there's a little bit of wisdom in here for you. If you were trading the advanced day trader profile, you would be trading like, well, you'd actually probably just be targeting 1.272 as well, or 1.618, or you do also have, no, that's right. So you could have gone 1.618. I wouldn't probably have recommended it in this case. I would have just taken the 1.272, and that lines up with the 4 hour 50. You're way better off going with that, just because the chances are of that stalling there is too great. But then you did have 1.618 is getting nearer to the daily 50. So you would have had a 4.21 in this case, with it just running in favor like that at that time of, if you had an alert set here, like as it's approaching profit target, and you were tossing up, am I going to take profit or am I going to let it go? With it running, sometimes I just take the gift from the trading gods and just go, yeah, just take the win. In this case, I would have taken the win, which you did, and you banked about 3.41, I think you said, something like that. Anyway, spectacular job, trade of the week. Moving on. This one here is an aggressive trade. Why aggressive? I would have called this one red. Aggressive, on its way down to recent lows, you could argue. Yeah, I don't like the double bottom here. I think that one was supposed to be red. We don't trade post double bottom, like bounce, and then this high is actually higher than that high. Yeah, that's a bad trade. To be avoided. This one here, okay, this one here is aggressive. Why is this one aggressive? Bullish engulfing, like that. Trading off of, okay, here we go, highs here. You guys see how I do this, right? Beautiful, like, price kind of wants to do a break and retest bounce off that level, perhaps. We'd have to explore further to see. I like that, touch there. pull back to there. Oh, I know why. This one would have been advanced because the 4-hour time frame, you would have had to enter this one as a live entry. Because with a big bearish engulfing candle like that, we would not be taking an entry order. Unless you took an entry order earlier in the day up here, and then you just weren't able to be on the charts for when the alert triggers. Fair enough. You didn't know that the bearish engulfing was going to do its big engulfingness, which it did. So yeah, the optimal entry would have been over here. It's too late in the day for me, 10 p.m. I don't really take entries or pip snatches there. Oh, and the other thing as well is that you'd be not interpreting this as a double top, which I wouldn't anyway. That was just the price here, pulling back nicely with one tiny little speed bump, which is one anomalous candle, which would have been London open. So yeah, nice trade, aggressive, but solid. Okay, what have we got here? This trade here, why do we not like that one? Trading straight into, so we're going into our red list here. Entering post, like this is just crazy stuff, right? Trading post resistance rejection, entered here, like somewhere around here. Now I know that might not be drawn super accurately for you guys, but you can see wicks. This is a whole zone, remember? This whole resistance zone is not one that, well, that price has come up and hit this level and then being pushed away. Just by bloody chance, if you got in there and entered and then got your profit, I'd say it's still a bad trade. Right? We don't need to speak more about that one. This one here, looking good on the surface. I don't know what the DDP is like on this one, so we just go V there. Yeah, okay, so you're entering, so we're going to talk DDP. This one candle close, like this is price could be bouncing off of that 50 EMA here. Right, that's not what we want to be doing. This is bounce, like it's kind of gently closed there. It's not the vibe. So no DDP is a simple answer to that. Moving on, what else we got here? Okay, we're going to see a few examples of this one because it's quite similar, right? Big old zone right around there. We can just go like that. What do you think? We're going to be trading straight into it? Even if we could like wiggle, and I want to make a point of this, even if you could wiggle your profit target down to say here, and you're like, well, I'm not trading off into that zone, these levels become repellents. This is the key point here. Price hits it, repels away aggressively. Hits it again, which strengthens it yet further, repels away, right? It's pushing, it's a repellent. So it's not necessarily that we're and I've got no problem with you trading into these levels, not trading through them, but trading up to or into them. They are magnets until they are rejected, and then they become repellents. You can see it hit this level. Quite often, post resistance level rejection, price will come down, trigger your entry, carry on, hit your stop loss, and carry on further. This is the sign that the uptrend, kind of triple, quadruple top, whatever you want to say, bounce. Now the downtrend has begun. It cascades down. Ooh, I just noticed this could have been a decent CBO here. That's quite a deep CBO. Entry. Now the 4-hour 50 is too far behind. Or the 1-hour 50, I should say. It doesn't quite line up. Oops. So yeah, no, bad trade. Don't take that one. What have we got here? Okay, another one. Another perfect example. Terrible trade. Don't take that one. Not financial advice, but if you're trading the pro trader strategies, it does not meet strategy criteria. That's what I mean by when I say bad trade and don't take it. It's through the lens of don't take this trade if you are doing your best to trade pro trader specific strategies. Don't take it because it does not meet strategy criteria. Right? That's the reason I ever say take or don't take a trade. Not at all with any intention in mind of your financial situation. Same thing here. Same thing. It's probably going to be another one over here. Okay, very similar, just the inverse, right? Because we've now gone, instead of pound dollar, Kiwi dollar, that's now dollar Swiss. So same thing. Entry looks like a beautiful arch here. Bounce. Trading post support level rejection. This one here, what's going on? Got to check that DDP. Oh yeah, so we're entering. Okay, so same thing as what I spoke about earlier. Price in this kind of overall downtrend, kind of complex pullback at this point. We just had this one candle close above there. It's not quite enough for me to be convinced that it's rocketing off, though. So that's where the DDP on this one just was insufficient. Not a fan. Guys, that is it for this week's weekly market recap. Big shout out to Leslie, who, this is how Leslie took a trade. Absolutely smashed it here. Oh yes, already had the 1.272 drawn in exactly the same way that I did, which lined up perfectly with the 4-hour 50 EMA, which stacking those two made it bang on. Really good. Spectacular. There's nothing I would change here. Trade management, maybe if you could have got around to that earlier and started securing or removing some risk, I'd say, earlier on. Like, we shouldn't get all the way to a full, whatever your profit target was on this one, 3%, and only have removed half risk or less. Guys, that is it for today. Thank you all so much for tuning into this week's weekly market recap. I hope you enjoyed. I'll see you all in the next one. Bye for now.